On Thursday, we have a webinar for our money management algorithms, the advanced for Vision 4. I want to show you how that works on SR CounterTrend. You see the trades, recent trades here. Look at a performance summary, and we're going to take a look. Here it is for 5 years with slippage and commission. And here is here's the equity curve. You can see this equity curve is based on closed trade equity curve. So each dot represents another trade taking. It's not intra-trade, but end of a trade equity curve. And there's open equity and closed equity. End of trade is closed equity curve. Bar by bar is an open equity curve. You can see these equity curves here at the bottom that represents the daily profit and loss. Those kind of represent what an open equity curve is. What happens if you? I'm going to show you what happens to put this, apply the equity curve algorithm to this SR countertrend strategy. All right, here are the results. If you apply the equity curve algorithm to the SR countertrend, you see before the average trade profit was 36. It's almost doubled. The drawdown was about 5,200. Now you've knocked that down by about 2,000 on a peak intraday peak to valley, and the close trade drawdown was also reduced by about 2,000. The return is increased from about 298 to 351, and you see the equity curve looks much nicer. And how do we do that? This is again over the last 5 years, and it is with slippage and commission. And so here's what our algorithm looks like. You've got all these options, all these different rules you can turn off and on. With ones or zero. One, it's on; zero, it's off. And with this one, we stop on we have the drawdown stop on and the RSI of the open equity turned on. And you come down here and you look at the individual inputs for those and the drawdown stop. This thing gets out on what rule is that? The drawdown stop is rule 7. So you come down to the rule 7 inputs. It stops on a $1,000 drawdown and it gets back in on a $3,000 run up. And so if you have a $1,000 drawdown, you just stop trading and you wait till it goes up from the lowest peak in that equity dip back up by $3,000. And so you might not you don't trade as much. You get about half as many trades over the last 5 years if you do that. Also, you take a look at the RSI of the open equity. RSI is an indicator that indicates when the relative strength, and so when the relative strength is, we come down here, rule 11, when the relative strength of the last 14 bars is greater than 70, then we trade this algorithm. And so we want to trade when the equity curve is strong, and we also stop on drawdowns and get back in on run-ups. And so we're trading when the equity curve is strong, and we sync it up with the original strategy, and we're basically looking at the equity curve of the original strategy to take trades on this strategy. And so we use a DLL to do that, and that's basically how the algorithms work. We're going to have more about this on Thursday at our webinar. I want to introduce this to you for those that are new to this, and you can sign up at the end of this video. I'll hyperlink you to the sign up page.